I'll call to order the regular June meeting of the Lake Charles Harbor and Terminal District. If everyone would please stand. Dear Lord, we ask your blessings on this port, the people who depend upon it, this board. We ask that you guide us in our decisions tonight, that they are for the betterment of those we serve. We ask this in your name. Amen.
Amen. Amen.
I'll ask Mr. Lorenzi to lead us in the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
The board encourages public comments and questions regarding all agenda items. Persons wishing to do so should complete a speaker's card, which is at the entrance of the boardroom. When speaking or asking a question on an agenda item, one should, in addition to completing the card, come to the microphone, be recognized, provide your name, address, and phone number. Comments by individuals will be limited to 3 minutes. The first item is approval of the May 23rd regular meeting minutes. Do I have a motion?
Mr. President, I'll move adoption of the regular minutes from May 23. Second.
Mr. Lorenzi moves. Mr. Dixon second. Any discussion? All in favor, aye.
Aye.
All opposed, nay. Ayes have it. Motion carried. The first item is submission 2022-030, approving the election of officers that will take effect July 1st. And I'll open the floor for nominations.
Mr. President, I would like to nominate the following people. Tom Lorenzi for President, Mr. Keith Prudham for Vice President, Ms. Judy McCleary for Secretary Treasurer, and Mr. Kevin Guidry for Assistant Secretary Treasurer.
I'll second that motion.
Okay, we have a motion and a second. Is there any other nominations? There being no other nominations, all those in favor of the slate of officers say aye.
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 All opposed, nay. Ayes have it. Motion carried. Submission 2022-031. Mr. Self.
Yes, staff requests the Board of Commissioners to authorize the Executive Director to accept the lowest responsive bid from Alpha and Palma LLC for the Industrial Canal Warehouse repairs. This is a warehouse that was constructed by BG at the Industrial Canal. They turned it over to the port last year. It was damaged by the hurricane, obviously in need of repair. Nick went out for bid in April. We received 2 bids in May. They were within 1% of each other. The lowest bid was $1,599,000 with a $240,000 contingency for a total of $1,839,000.
Okay, you have a motion.
I'll make a motion that we approve 2022-031.
Second. Mr. Dixon moves. Mr. Prudham second. Any discussion? No discussion. All in favor, aye.
Aye.
All opposed, nay. Ayes have it. Motion carried. Submission 2022-032. Mr. Self.
Staff requests the Board of Commissioners to authorize the Executive Director to approve a change order to the contractor Keeler Construction for the removal of asbestos in Shed 7 in the roof for Port Project CP 21011. This is a project that was awarded to Keeler Construction in 2021. We presented you with a change order because there was asbestos found in the wall and the roof. The asbestos that was originally found was in the caulking and the sealant. The plan with that change order was to remove the caulking asbestos from the wall and the sealant and the roof. The caulking and the sealant. Once construction started or the demo started, they were able to remove the asbestos from the wall, but from the roof, because of there were multiple layers of construction. It got to the point where it just wasn't economical to try to remove the asbestos. And Nick, correct me if I'm wrong as I go along. And so we are asking the board for another change order, which will allow the material, rather than to be removed, the asbestos removed
And just to add, I guess this is a change order to the authorization. The actual change order to the contractor will only be for the amount expended. So as we start debris removal, we'll confirm everything via truck tickets and verification of loads, and that's what the change order amount will ultimately be for. And since we've actually prepared the submission, the estimated loads has already come down substantially. We're seeing quite a bit of savings. Round numbers about 60,000 less than originally assumed when I prepared the submission.
And DEQ has been involved each step of the way to make sure we're in compliance.
As well as our environmental consultant, Booth Environmental.
How much a ton is it running, Nick, to turnkey it?
Yes, sir. I actually have that handy. It's about, for a 30-yard asbestos dumpster, it's about $1,875, $1,875 a load. We're actually seeing limitations by the landfill as well because it's asbestos contained, they have to cover it each day. And so they're restricting us on the amount we can haul each day. So it's slowing us down.
Okay. Do I have a motion on,
Mr. President, I'll move adoption of submission 2022-032.
okay. Mr. Lorenzi moved, Mr. Guidry second. Any other questions or discussion?
Yeah, I would just add, Nick and I went on a little field trip out there, and there is a lot of material, and physically, I don't know how you could possibly separate asbestos from non-asbestos. It's quite a volume of the material, so.
I will add, we are still
I think this
separating
is-
the structural steel and the walls as they're clean. We can still salvage those for scrap, so the contractor's taking that into account as well. But yes, a lot of material.
Thank you, Mr. Chairman.
Any other questions? All those in favor, aye.
Aye.
All opposed, nay. Ayes have it, motion carried. Submission 2022-033, Mr. Self.
Approval is sought to amend the real estate option agreement with Lake Charles Methanol LLC to extend the term. Lake Charles Methanol requested an extension through September 30th of 2023, and continuing the option payment of $35,000 a month, and they've been paying that each month. And we have Don Maley is here. Don Maley has been involved with the project from the beginning, ready to make a presentation.
Okay, Mr. Maley?
Thank you very much, Mr. Chairman. Appreciate the opportunity to give you all an update. I'll just start by mentioning that I think we've seen over the last few years the interest in and demand for low-carbon products is experiencing kind of exponential growth and interest in the marketplace. And so we're very excited, you know, that the fundamentals for our project, we believe, are stronger than ever. The team remains committed to the project. All of our stakeholders continue to support what we're doing. So we're very excited about our future. A little bit of history very quickly. Most of you will recall that for years our biggest problem was trying to arrange the project equity. We had everything else for the project, but we needed to raise the equity. This time last year, we were successful in finding an equity investor, I Squared Capital, a $15 billion energy and infrastructure fund committed to provide the equity capital to our project, and we thought we were ready to go. Unfortunately, beginning of August, Fluor Corporation, who had been our engineering and construction contractor for years, told us that due to their own financial situation, nothing to do with our project, they were no longer able to support our efforts, and so we had to kind of go back to step one on the engineering construction side and go back to the market and look for a contractor, engineering construction firm, and that took us many months. We had to run an RFP, do evaluations, negotiate with different parties. In February, we selected Technip Energies, a large French-based engineering construction firm. We then spent the spring negotiating with them contract, which we've now completed. Where that leaves us now is that no engineering firm is going to provide you a fixed price to build a large complex project like this without doing their own engineering work themselves, not going to rely on somebody else's drawings and designs. So they will be initiating an 8.5-month process to complete that work. Normally that would take over a year, but we do have big pieces of the project that are already done. We have a big air separation unit. We've got the methanol unit. So the big pieces are kind of done. It's just a matter of pulling it all together into an operating plant. That Technip has to do that work, but they've committed to give us a final price and final contract in 8.5 months. So that puts us into March of next year. As I said, all of our customers remain in place. Department of Energy conditional commitment to provide the debt financings in place. I2 supporting us as the equity provider. So once we get that final contract in place, it's a 90-day process with the Department of Energy to close the loan. And they have various hurdles they have to go through internally, and they've got to send it to our final credit application to the Office of Management and Budget to actually price the loan. So there's a 90-day process. So we see ourselves in a position to actually break ground and begin construction this time next year. And we've asked for an extra 90 days just as a cushion in case things slip a little bit. So that's where we stand today, and happy to answer any questions.
Mr. President, I'd like to make that motion to approve submission 2022-033.
Second.
Okay, Mr. Darbone moved and Mr. Guidry second. Is there any discussion or questions of Mr. Maley? I guess one thing that in talking to some of the other members, Mr. Maley, is that this extension, I guess, is what, for 13 months, 14 months?
Yeah, I think that's correct.
Yeah, and typically, y'all have done numerous extensions, and the board doesn't hear until right at the last minute what's going on, what is impacting that requires another extension. Would it be possible that we could set up something where y'all could report to the board maybe on a 6-month basis as to what's progressing? Just
Yeah. We'd be happy to do that. We'd be happy to do that quarterly. We could do it quarterly. Be pleased to have a regular briefing session. Yes.
Okay, if you could do that quarterly.
Yes, absolutely.
We'd appreciate it.
Great.
Any other discussion? All in favor, aye.
Aye.
All opposed, nay. Ayes have it, motion carried.
Thank you very much.
Thank you.
Thank you.
Good luck.
Submission 2022-034, Mr. Self.
Now, approval is sought to authorize the executive director to enter into addendum number 2 of the ground lease with Southern Ionics to add warehouse 17 to the ground lease. Southern Ionics currently leases on a multi-year basis trench shed 16 and trench shed 150. They currently lease 17 and trench shed 17 on a month-to-month basis. This addendum is just rolling trench shed 17 into that multi-year lease as opposed to leaving it month-to-month.
Mr. Chairman, I would make a motion to approve submission 2022-034.
Second. Ms. McClary moves, Mr. Prudhomme second. Any discussion? No discussion, all in favor, aye.
Aye.
All opposed, nay. Ayes have it, motion carried. Submission 2022-035, receiving and accepting the audit financial statement. Yes, Jason?
We have Jason Gilroy with McElroy, Parker, Birch here to kind of go over the audit and the annual comprehensive financial report for 2021.
Good evening, gentlemen, Mrs. Clerk. Just want to go over briefly the financial statements for the year ended December 31st, 2021. I'll try to be brief, and I kind of want to, I'll try to focus on a couple pages so we're not flipping back and forth with the report if you want to try to follow along. So we have concluded the audit as of December 31st, 2021, and we have issued our opinion thereon on page 19 of the annual comprehensive financial report, and that's titled Independent Auditor's Report. If you've ever read these in the past, this year's looks a little bit different. They've changed the wording a little bit to try to add just a little more context of what the responsibilities of the auditor is and what the responsibilities of the auditee is, what reasonable assurance is, just some key definitions that necessarily haven't been there in the past. But the bottom line is that we have issued an unmodified or clean opinion on the financial statements, which means that we believe that the financial statements present fairly in all material respects the financial position of the Lake Charles Harbor Terminal District as of December 31st, 2021. And now I'd like to hit on some of the financial highlights. They're going to be found on your two major financial statements that begin on page 36. That is your statement of net position and the statement of changes in net position on page 38. So this is basically the balance sheet and the income statement for the port as of December 31st, 2021. I'm going to make some comparisons, even though this isn't a comparative financial statement. I have the numbers from last year, and I'd like to draw some comparisons to last year. Last year was obviously a tumultuous year that everyone is aware of, and so the financial position of last year was significantly different than what it is this year. So I'm just going to point out some of the larger variances, both on the balance sheet and the income statement, that might be of interest to you guys as commissioners. First and foremost, on terms of cash and restricted cash, the cash balance at December 31st, 2021 was $87.8 million, and the restricted cash was $11.8, and that compared to $79 million in unrestricted cash last year and $7 million of restricted cash. So there's an increase of about $13 million in total of both unrestricted and restricted cash. Now, I do want to note that there was about a $5 million increase in restricted cash as a result of the board's action to reserve $5 million for future insurance deductibles should we encounter another natural disaster. And so that's the reason for the increase in the restricted cash balance. The next major line item that had a bit of a change is the intergovernmental receivable balance. As of December 31st, 2021, intergovernmental receivables were $10.8 million. This compared to last year of a little under $5.5 million. And I know I'm not telling you anything you guys haven't been talking about for the last year and a half, but this is primarily related to FEMA receivables. And so the bulk of that project of that balance over $10 million is related to what we call our obligated FEMA funds. Of course, the process, as it has been described to all you guys, is you submit project worksheets up the line to FEMA and GOSAP. FEMA eventually approves and obligates funds. Well, from an accounting standpoint, once those funds are obligated, we can then book them as a receivable on your books. Now, that doesn't mean that that's revenue on the books, but it's just the receivable. So once expenses are incurred that correlates with those obligated funds, then they're considered earned. Otherwise, they sit in unearned revenue. So you'll see as we go through the rest of the balance sheet and income statement where that's going to impact our balances in unearned revenue as well as in grants and other contributions. The next line item that had a significant change was in capital assets. And capital assets decreased from $267 million last year to $264 million this year. That's not a huge decrease, but it's kind of unusual for capital assets to decrease when you have so much construction and so forth going on. But the main reason for this is if we think back to last year, we retired about $20 to $25 million worth of assets, the ship loaders and unloaders, which significantly decreased our asset balance. And then again, this year, there was evaluations made on several structures that had sustained significant damage from the hurricane, which were also impaired. And so that when you look at the income statement in a second, you'll see a loss on impairment of assets, and that's what that is. That's writing down assets whose value has significantly diminished as a result of the storms. And so that impacts the net value of our capital assets. So total assets for as of 12/31/21, is $391.2 million, compared to last year was $375, for about a $16 million increase in total assets. On the liability side, in the current liabilities this year about $11 million. Last year was about $17 million. That's a pretty significant decrease. At the end of 2020, the port was dealing with a lot of the hurricane expenses and cleanup mitigation and so forth. And so there was a large amount of hurricane payments that had been accrued at the end of last year. So that's primarily a hurricane event, and now we're back to kind of a normal level of current liabilities, not normal level for everything, just current liabilities. The second line item that I'd like to talk about is claims payable. Okay, so the long-term, in the non-current liability section, the second line item, you have claims payable of $48,723,150. This is related to the litigation with IFG. And I want to walk through a little bit and give you some background on how we came up with this number and where this stands in terms of the total issue. And to do that, I am going to make you turn to page 67 and note 14 to the financial statements. Note 14 is for contingent liabilities and commitments, okay? And so in this, so according to, we're dealing with, this is considered a contingent liability for litigation. That means that we have an unresolved amount and unresolved determination in some form or fashion, so we have a contingent liability. When we're accounting for contingent liabilities, there's 3 classifications of contingent liabilities, and it dictates how you are to account for those liabilities. It can be a remote possibility in which you don't necessarily have to do anything with the potential liability. There is a reasonably possible liability, which we will talk about, and then there is a probable liability. If you have a probable liability, then the entire amount of that defined amount is recorded as an accrued liability. As has been represented by management and legal counsel, we are still in the reasonably possible category for this contingent liability because of the continued appeals process that is going to go on with this lawsuit. So until we have a final settlement or final adjudication, you wouldn't necessarily book the entire amount of potential liability. So as of right now, and I'll just walk through, we have disclosed in the second and third paragraphs of note 14 that the court did issue a final ruling with a calculation of damages against the port of in excess of $124 million. So that's what the accounting standard says we need to do, is that we need to accrue the best estimate or the low end of an estimated range on the financial statements, but we have to disclose the total worst case scenario, highest end of the liability in the note disclosures. And so that's why you see within note 14 that we disclose both that the amount that we accrued is $48.7 million, but that there is a reasonable possibility that the district will owe up to and in excess of $124 million. So that's the change from last year to this year. That's from the final judgment. The actual accrual did not change, only the note disclosure changed. And that will continue to be assessed as the litigation goes forward. So does that make some sense to everyone? It's strictly based on what's called the FASB codification, ASC 450, accounting for contingent liabilities. So it's kind of an applying the facts and circumstances of the current case. So going back to the balance sheet on page 37, the next liability is the net pension liability. Current net pension liability is $4.1 million. Last year was about $21 million. This is a direct reflection of the investment performance of the Lasers retirement system. We recognize our portion, or the district's portion, of the unfunded liability of the Louisiana state retirement system, employees retirement system. Because the market did extremely well, that unfunded liability decreased. Therefore, our corresponding percentage of that liability also decreased. The next line item is the unearned revenue, which I mentioned earlier. The unearned revenue is a little over $10 million, which is about twice as much than what the unearned revenue balance generally is. That represents those obligated funds which the port has not incurred the expenses to claim those as revenue, to submit as reimbursement for those revenues. So they sit in unearned revenue until those projects or those specific actions take place. And then finally, just the total liabilities for the year, $124 million compared to $134 million last year, a decrease of $10 million. which is primarily the pension liability and the account and the current liabilities. And so net position increased from $246 million to $267 million, a $21 million increase over last year in net position. Turning over to the statement of revenues, expenses, and changes in fund net position, or what you would consider an income statement or P&L. Vessel and cargo revenues, $17,460,000 compared to last year of $17.9 million. That's a slight decrease. We saw that the district saw a fairly significant drop in raw coke handling, but it was offset by increasing in barite handling, calcined coke handling, and some LNG products that were handled that offset most of the decrease that was in raw coke. The second line item, rental of equipment and facilities. This is primarily our leases and gaming revenues. So the gaming revenues obviously increased as they recovered from COVID-19, and you had a full year of gaming revenues. And also you had a fairly significant amendment to the Driftwood lease as they went into the construction phase of their lease. That increased lease revenue as well. So you had about a $1.4 million increase in that lease revenue category. So total operating revenues just under $38 million compared to $36 million last year, about a 5% increase in operating revenue. Operating expenses for the year, $42.5 million. That compared to $39.5 million last year. So you had an increase in operating expenses. A couple major factors. One, insurance expense increased $2 million. As you guys are aware of, the insurance market changed dramatically after the hurricanes, really increased the insurance premiums on you guys. But the second element of the increased expenses is really a function of the damage to the district's infrastructure. So when you go from a very efficient process with specialized equipment and cranes that are operational, and you lose those cranes and those very efficient operations, and now you're trucking and handling cargo in a very different way, you see some increases all across the board in expenses. So we saw increases in outside services, professional services, rent equipment and building, and stevedoring services. All of that contributed to that increase in operating expenses. But it's really just in order to maintain operations of the district, it caused some increased costs with less efficient operations. So net operating income for the year was a $4.6 million loss, which is a little bit worse than it was last year. Non-operating revenues and expenses is really where you see a lot of the fluctuation from an income statement standpoint, because that's a lot of one-time type events. The loss on repairment and impairment of assets, retirement of assets. You know, last year you had $20 to $25 million of ship loaders and ship unloaders that were eliminated, retired. This year we had some retirements, but not nearly to the extent that we had last year. And so when you really boil it down, non-operating revenues had a $78 million shift, and also the district took a $47 million charge for litigation. So the two big factors in non-operating income going from what was a $61 million net non-operating expense to a current year $17 million net non-operating income was $48 to $49 million of litigation charges and about $25 million of hurricane-specific events that occurred last year, which didn't occur this year. So that really shows where you kind of lose some of the comparability between last year and this year due to those really significant effects that occurred in 2020. And then finally, grants. Current year grants were right at $9 million compared to last year, which was $6.4 million. So we have the increase in FEMA revenues of up to about $6.2 million that we've actually been able to recognize as revenues, and $2.8 million of ARPA funds, the American Relief Plan. Did I miss?
6.2 was ARPA.
Okay, 6.2. I'm sorry, 6.2 is ARPA. We've only actually recorded 2.8 of FEMA. Sorry about that. The American Relief Plan was a port relief program by the state, which allowed for fairly general use for the district. But only 2.8 million of those obligated funds have actually met all the criteria to be claimed as revenue. So all of that put together, we have a net income or net change in position of $21 million this year compared to a $58 million loss last year. That's the financial information. We did issue two other reports this year that I'd like to call your attention to. The first is the Uniform Guidance Supplementary Reports. We always issue reports on internal control and compliance issues. This year we had to issue some additional reports because of the federal funding, you were subject to what's called the single audit, which is according to the Uniform Guidance. So because we had about $7 million of federal expenditures, you're subject to that, to us auditing specifically the FEMA program. We've issued no findings of internal control or compliance for either the single audit or for the normal governmental accounting sort of yellow book audit that we would normally issue to you guys. And then finally, as you might remember, 2 or 3 years ago, the Louisiana legislative auditor required agreed upon procedures be applied for every governmental entity that is subject to audit. They reinstated that this year, and so once again, we went through the process of performing those procedures, and there were no exceptions noted within our to those procedures. So a very good outcome on both of those accounts. And with that, I'll entertain any questions that you might have.
Any questions? Okay, I'll entertain a motion. We are receiving and accepting the audited financial statement, not approving it, so I'll entertain a motion to accept. So moved. Mr. Prudhomme moves.
I'll second.
Second by Mr. Dixon. Any other discussion or questions? All in favor, aye.
Aye.
All opposed, nay. Ayes have it, motion carried. The 2022 legislative session briefing, Ginger, and I'd ask Ginger if she would introduce our legislative members that are here tonight, recognizing that give them
Sure
an
will.
opportunity to speak.
Thank you, and thank you, Commissioners, for your time tonight. I'll make brief comments and give our legislators an opportunity to say a word or two. But we have Senator Mark Abraham, Representative Philip Tarver, Representative Les Farnham, and Representative Troy Romero, who came to spend time with us. And before I start, I want to thank them. We are truly blessed with a delegation that gets along and serves on major committees. I was just thinking about it. We have Commerce, Finance, Appropriation, Ways and Means. Mike Reese is Rev and Fisk. Jeremy's on Jude A, Insurance. They've spread themselves out, so we have a voice where we need it on the issues that we take on in Baton Rouge. It was a regular session this year, meaning any issue could be debated other than tax matters. We prioritize, obviously, going after money. The state had a lot of money to appropriate this year. They had a roughly $3 billion pot to play with. It was leftover American Rescue Plan Act dollars. They had excess current year money left over, and they had surplus money left over from last year. To their credit, and I'm going to brag on them, they used the money for large infrastructure projects. I won't get into the statewide ones, but for our area, as you know, was the I-10 bridge, and the port was also fortunate to get our berths 4, 5, and 6 in the capital outlay bill. So we got that. We got our reauthorization as well on the mobile cranes. So the next step would be for us to go to Bond Commission in July to get the reauthorization to finish spending the money on the mobile cranes, and then we'll work with the administration on hopefully getting on the new lines of credit list. I'm here in October, and I'm going to work with the staff, obviously, on timing of that for our project. We were asked by the Governor's Office administration to update GOSEP periodically, given the size of the project in capital outlay, in hopes that our grant money and FEMA reimbursements would decrease the Priority 5 money, because we are under the state's capacity limits, which kind of threw some of the projects out of whack. With regard to our audit report, I did hear something I wanted to mention. We did not expend the $14 million for the state budget year last year, but we were able to amend language in the state's supplemental appropriation bill that allows us to finish spending the $14 million through June 30th of 2023. There is a list of requirements, as our staff knows, that we have to meet before expending and getting reimbursed by the Treasury. And because their budget year ends on June 30th, we'd have lost a significant amount of money. So that'll be rolled over into this fiscal year for us to continue expending it. The governor had, I think till yesterday was the deadline to dispose of all instruments on his bill. We have 5 in our report. I'm still waiting on act numbers. There were 2 public records bills we were involved in, some public works changes. So once I get those updates, I'll provide them to the port director and get them all to you. I don't anticipate any surprises. We had a very good session. I'm very proud of our delegation, and I just wanted to publicly thank them. Some of them couldn't be here tonight. I personally thanked them, and I know that the port director has reached out to them as well. I'm happy to answer questions of any of you, and if not, I'll turn it over to whomever wants to come up and say a few words.
Thank you. Thank you, Ginger.
Thank you.
She
Well,
said
the only one that might
she
wanna
said a
speak-
few words.
The only one that probably wants to speak is Troy Romero, maybe. But anyway, a lot to talk about, really. I don't know how far y'all want me to go on this. You know, once a politician gets up there, they just keep on talking. But first of all, I want to thank the Port Board for what they do, the commissioners, the director, the attorneys, all the staff. I've sat in your shoes for just about 8 years, so it's a very, very important job, very important responsibility. It is the Port Authority and the port complex is the economic engine of Southwest Louisiana. There's no doubt about it. And we want to always do what we can to take care of y'all. And I think that is reflected in some of the dollars that we were able to head your way. If you remember last year, we had a Southwest Fund, and we had some money, and we were able to give y'all $14 million. We really thought there was a possibility that we could do some more this year, but I can tell you that it was a very contentious session. You think it's bad when you don't have money. When you have a lot of money, then everybody wants something. And everybody's project is justifiable to them, okay? And I'm just going to give you an example on how that plays out on the Lake Charles Bridge. You know, we tried to get as much money as we could from the bridge, and we all were in a meeting with about, I don't know, 15 or 20 legislators and the President of the Senate and the Speaker of the House. And we were trying to make the case of why we thought our I-10 bridge was the most important bridge in the state. Now, on paper, it might be, okay? We have a safety factor. There's a lot of issues on the I-10 bridge that we need to take care of. But you're dealing with 144 legislators throughout the state of Louisiana. They believe their project is the most important project in the state. And the Lafayette people said, wait a minute, I-49 South, we've been waiting to get around traffic congestion for 20 years. Don't tell us that the I-10 bridge is more important than the I-49 South. The Baton Rouge people will tell you, we have massive congestion on the Mississippi River Bridge. Don't tell us that your bridge is more important than our bridge. So that just gives you a sense of the atmosphere when you're going after dollars. Everybody's going for the dollars, and it's hard to convince everyone that your project is the best. And I can just tell you that the legislature as a whole became Lake Charles weary, because every time we turned around, we were asking for money, and a lot of times we were getting money. And after a while, they said, enough is enough. We managed to get an additional $200 million for the bridge, for the I-10 bridge. We came in with 200. Now we have $400 million for that I-10 bridge. And it was a group effort by all of us. But again, when you keep on pounding the committees and telling them that you want more and more money, they just kind of get a little tired of it, okay? And at one point, we had $28 million coming to the 4 mega projects, which is the I-10 bridge here, I-49 South, the Baton Rouge Bridge, and I-49 North. we used some of the vehicle sales tax to take some of that money and put it in a fund and then transfer some of that money into the mega fund. There was $28 million in that fund. We did manage to get more money in that fund. At one point, it was $54 million for each project. That means the Lake Charles I-10 bridge would be getting $53 million a year. At the end, when it went to Conference Committee, because of everybody saying, look, I believe I-12 is important, we got left out of this pot of money. We ended up limiting all the dollars to $40 million instead of the $53 million. Now, it's not over, but still that's huge, because we pushed very hard to get that extra money because we were trying to do the bridge without doing a toll. It's not over because one of those projects might not make it. In other words, I-49 North might not be the most important. It's the least of the four. Whether that ever gets funded, I don't know. But in that bill, it says if any of those projects do not get funded, that money reverts to the other three, which would be we're one of those three. So we could actually come back and get $53 million again. But that's part of the political process. We'll deal with it in the future. But from a port standpoint, we did unbelievable. I'm just telling you. Because the port, with the amount of money that y'all got this year, really kept us from getting even more money. Because they'd come to me, I'm in Senate Finance, and they say, wait a minute, you got cranes, you got the port, you got I-10 bridge, you got extra money in the vehicle sales tax. You got to stop. In committee sometimes they would joke. They would say, oh, here comes Abraham, he's trying to get more money for his area. So I'm just telling you that was the mood, and at one point we tried to get some extra money, like y'all had $14 million last year from a Southwest fund. I tried to push that. There was no takers. They said, y'all have had enough. Well, I mean, you've got enough, okay? We can't go anymore. Too many other people are complaining that y'all have got your more than your fair share. And yes, we used the hurricane as an advantage and all the sorts of things. We still did that, but after a while, it became Lake Charles weary. I have to comment on Ginger. She did a magnificent job of setting y'all up and working the system to make sure that y'all got the maximum amount of money from the governor all the way to the president of the Senate and the Speaker of the House. And it was a group effort, but she was the tip of the spear. And if we hadn't been all working together, it would not have happened. And I'm not saying that because she's here. I've been in this system now 7 years, and I know how it works. And sometimes you don't get what you want, but y'all came out really, really good. Some entities in Southwest Louisiana were a little aggravated because they did not get what they felt was their fair share, okay? And we tried, but, you know, again, like I said earlier, you can only get so much. But we're still going to go after it. The capital outlay process became very brutal. Funding that we had from the governor to the House of Representatives, to the Ways and Means, we had money in there. All of a sudden, 2 days later, Ways and Means had an afternoon meeting, and we got cut out. So that's how brutal the process was on who was going to get the money and who was not going to get the money. That was kind of the budget process. We had big ticket items. We shored up the unemployment trust fund of about $500 million. If we didn't, that means the business people throughout the state would have to pay a little bit more in tax. We had a debt service for a levy district lawsuit. We had to pay $400 million installments. We paid another $400 million installment this year. That saved the state millions of dollars. So there was a lot of big ticket items that we had, and that's where a lot of the money went. All the Baton Rouge Bridge got $300 million, I-1049 got $200 million, we got $400 million, I-49 got $100 million. So once you start dealing in $100 millions, after a while the money runs out pretty quick. But that's, I'll start talking about the budget. Just I'll give you a brief outline on the redistricting plan, okay, just to kind of give you a little, hope I can do it in 3 or 4 minutes. It really was a battle of the 14th Amendment and the 15th Amendment. The 15th Amendment says that if you have a third black, you need to have a third of your U.S. congressional district to be black. We have 6, you got to have 2. That's the 15th Amendment. The 14th Amendment says, in order to do that, you cannot gerrymander. You cannot take a piece and bring it into the district just to make sure it's black. You can't do that. That's called racial gerrymandering. So you had those two battling each other. Yes, it's supposed to be 2 out of 6, a majority-minority district, but yet you have the racial gerrymandering in the 14th Amendment. So that battled it out, and at the end, as you're aware, we kept it the same. And one of the reasons was 10 or 12 years ago, under the Obama administration, when you had two majority-minority districts, they said one of them was illegal according to the 14th Amendment. It was racial gerrymandering. They did away with it. That's how we got the 5-1 that we have now. The Justice Department approved that 5-1 because they said it satisfied the 15th and the 14th Amendment. So now in 2022, 12 years later, the population of Louisiana only went up about 40,000, 50,000 people over 12 years. So the placement of the minority areas didn't change. The population didn't change. So we felt it was approved 12 years ago. We couldn't get the votes to change any other way, so we went with the same thing. We have 3 branches of government. We have the legislature, which is a deliberative body. A judge can't just tell you to do something. You can't tell 144 legislators to do something. You got to go through the process. The judicial side has their 3-pronged process. Federal judge. After that, it's an appellate court. After that, if they accept it, it's the U.S. Supreme Court. So they just went on step 1 of their 3-step process. At the end, if the U.S. Supreme Court rules that we have to have 2 out of 6, then that'll happen. But that's just to give you a little, again, brief idea of the thought process and all went on the special district, on redistricting. I think that's about it. Anybody else? Representative Romero, you want to come up and say a few words? Huh? He always likes to speak. That's why I have to call him up.
No, the good news is that House members typically say very little after a senator gets done talking. I would just like to say what a pleasure it is to support you and support your endeavors, and the hard work that Junior does is amazing, and your Southwest delegation is positioned on very important committees, and that helps all of Southwest Louisiana, not just the port. I'd be remiss if I didn't speak briefly about how important it is to keep your relationship with the Jeff Davis Rice guys. The port is very important to them. They're going to grow really fast once this mill is built, and I think the relationship between the two of you will be tremendous for all of Southwest Louisiana. And I just wanted to make sure that we made that point, that that what you do for them and what they're hopefully going to do for you will be something that we can be happy and proud about for the future. And I'd be glad to answer any questions. Thank you for your support, and like I said, we're very proud to support you.
Thank you, Charles.
See how much easier that is to let the representative speak?
I forgot one.
We do appreciate you.
No, I forgot one important thing.
Time.
The Nelson Road Bridge. Okay, I know we've been working on that. It needs Coast Guard approval, and I just got word. Again, we haven't got the approval, but y'all probably aware they're waiting on the mariners to say that the width of the bridge that went from horizontally from 116 feet to 70 feet, they want to make sure that's okay. The attorneys have been in contact with them. They feel it's okay. They're going to write a letter saying that the 70-foot width is okay. When that happens, the Coast Guard gives the approval to the Nelson Road Bridge, and then we can start. So I just want to give you that update.
Thank you. Okay, thank you, Mark. Anyone else? Okay, well, on behalf of the board, I'd sincerely like to thank all of y'all for y'all support in the session and bringing home the bacon, so to speak. So thank you very much. Next item is the May financial briefing note. Cameron?
Yes, sir. So for the month of May, the port generated revenues of $4.2 million, which was favorable, about $1.3 million. We saw higher pet coke, which is great. We hope to continue to see that. We also had additional revenue related to the transfer of some petroleum byproducts. And we had one vessel that remained docked for an extended period, which obviously generates us revenue as they sit docked at our rate. Expenses were $2.9 million, which was $400,000 unfavorable, but we had higher operating expenses due to the higher tonnages. We also had some repair and replacement costs at City Docks and BT1 that were causing those expenses to go up. Depreciation expense was $100,000 favorable. Non-operating revenues and expenses were also $100,000 favorable. So EBITDA ended up being $1.2 million, and we had cash flow of $1.5 million, which was a great month for us. Onto the balance sheet, unrestricted cash went down $5.6 million. Kind of the same things we've seen throughout the year. Hurricane recovery projects, we're spending money on those. Public-private partnership, the insurance premiums, and dredging, all causing that to go down, partially offset by ad valorem tax collection and the money that we've received from the Port Priority Program related to berths 2 and 3 reconstruction, and the monies we received from FEMA GoSep. Restricted cash went up 1.3, primarily due to the Calcasieu River Fund, and that was offset by our principal and interest payment and a payment we made to the Corps out of the Calcasieu River Fund. Government receivables up $500,000 due to the FEMA receivable on the obligated funds, and partially offset by some of those funds that we received and funds we received for the Port Priority Program. Fixed assets are up $2.6 million due to multiple repairs that have been completed and the 80-ton crane that we purchased. Construction in progress is up $12.4 million, just due to the massive projects we have going on. And long-term debt's down $1.2 million due to the payment on outstanding bonds. Other than that, there were no significant changes. Any questions? Thank you.
No questions. We'll move on to the FEMA GoSep briefing note. Cameron again.
Yeah. This will kind of tie into my departmental report. So we actually saw the obligated projects increase about $2.9 million, which is pretty, I guess, significant. And we actually had a call this morning with CSRS, and there are quite a bit more that are very close to being obligated that we'll hopefully see next month and see a large increase in that. So that's really it.
Good. Any questions? Okay, the administration, finance, and security.
That was pretty much what I was going to say.
That's pretty much it. Huh? Okay. Navigation, Channing.
Commissioners, in addition to my report, I'd like to bring you up to speed on what's going on with the funding trip we're going to make to Washington later in this month. It's scheduled for the week of July 18th. Picard Group has gotten meetings confirmed with Representatives Higgins, Scalise, Letlow, Graves, Carter. No response yet from Representative Johnson. We've got a meeting scheduled with Senator Cassidy. Nothing yet from Senator Kennedy and his staff. And they are working on meetings with OMB, which will likely be virtual, because OMB is not accepting face-to-face meetings. Corps of Engineers senior staff, don't know if that's going to be in person or virtual. They are also working on the House Committee on Transportation and Infrastructure, Senate Committee on Environment and Public Works, and the House Appropriations Committee, Subcommittee on Energy and Water. So if we get all this pulled together, we're going to have a very full few days up in D.C. But it usually turns out to be productive. Are there any questions about this or my report?
I have a quick question. So Channing, the legislative branch in Washington is meeting in person and the executive branch is only meeting virtually. Did I understand that correctly?
That's what it appears to be. We're not quite sure what Corps of Engineers is going to do, but the Capitol building is open, and Picard was able to arrange for us to use the majority whip's, the minority of the minority whip, his conference room. in the Capitol building, so that we'll have face-to-face meetings in the Capitol. And then we'll go see Senator Cassidy and hopefully Senator Kennedy. The other staff meetings in the House and Senate should be held in the Capitol building face-to-face. OMB, no, that'll be virtual, and Corps of Engineers, we're not sure yet.
Is that only in DC? But when you meet with the Corps in Louisiana, is that the case as well?
We met with the district face-to-face.
That's what I thought.
We met with the division in Vicksburg. That was a virtual meeting.
Thank you.
You're welcome. Any other questions? Thank you.
Thank you, Channing. No other questions. We move on to operations. Todd?
Yes, sir. It's been a busy month. At City Docks, we had 2 cargo transfer ships, a structural steel shipment, a liquids ship, and 2 lumber vessels. Between now and probably the end of July, we're expecting 4 more lumber ships, 2 rice shipments, and a rubber shipment. It's going to go break bulk for the first time. Hopefully, if that goes well, they may schedule about 5 more of those rubber shipments to go to South America, and another large cargo transfer of about 20,000 tons. At BT1, we loaded a coke ship with about 58,000 tons, discharged several rutile ships and barges, about 20,000 tons, and discharged a green coke ship. It's about 35,000 tons. We're currently working on a barite ship and a calcine ship, and then we also have 2 rutile ships scheduled for the month and another green coke. So we're trying to stay busy. If you have any questions, I'd be happy to answer them.
Any questions? Thank you, Todd. Cargo and trade, I see Terrence isn't here.
Terrence is out on sick leave.
Okay. Engineering, Nick?
Yes, sir. Thank you, Mr. President. I just wanted to give a couple quick updates on a couple projects that we have brought up. First 2 and 3 is our CMAR construction project that has 4 priority money tied to it. Pile driving is continuing to progress. We're continuously hitting underground obstructions, but the design team and Bow Brothers is working through those pretty nicely and continuing to make progress even through those obstacles. Sheds 16 and 17, we mentioned with the lease with Southern Ionics, the hurricane repairs are nearing completion on those. I think both roofs are almost complete. Most of the wall panels are done, so by the time those are done, we'll have 2 very resilient structures to continue on with those leases. And then also wanted to thank Ginger personally and the Louisiana delegation. She's always taking my phone calls whenever she's trying to get us money, and she can take my my engineering talk and put it out in layman's terms for everyone. So really appreciate that. And also wanted to thank Sean Davis as part of my contracts management team. She's the one that helps me on all the reimbursements for all this grant money and everything. And I was just trying to figure it out. There's actually 6 to 7 programs right now that she's helping me seek reimbursement through, and she keeps me straight on all those. So, yeah. And I'll be glad to answer any questions.
All right. Thank you, Nick. Anything in the federal lobbyist update? Okay.
Stepped out.
Yeah,
Yeah.
he stepped out.
Any other matters to come before the board? If not, I'll entertain a motion for executive session.
I'll move.
Mr. Lorenzi moves.
Second.
Mr. Prudham second. Any discussion? All in favor, aye.
Aye.
All opposed, nay. Ayes have it.